The timing, interesting here. A lot has changed in the last few days. What does that mean for Blue Apron?
It's going to be another challenge that they're going to have to justify on this roadshow, which launched today. So this is a company that operates in a space. We know that food delivery is so fueled by competition. It's an expensive space to operate in because so much of the costs do go to marketing. You're always fighting. It's kind of a land grab out there for wallet share for customers. This is especially tricky for Blue Apron in that Whole Foods will now potentially have the logistical empire that is Amazon, and Amazon customers will have more access to Whole Foods. Why is that important? Because those are the kind of high earner customers, the top 10%, let's say, of US households who are willing to spend a little bit more to get the quality that Whole Foods promises. Well, that kind of happens to be the same group that Blue Apron is targeting. I spoke to an analyst earlier today who said, look, they're all fighting for the same wallet share here of these high spending customers. It's going to be hard for Blue Apron to fight down the value chain because, frankly, folks are just not willing to spend $11, $12 a plate for a box of fresh food, granted, but that might spoil. So when you think about where Blue Apron's growth is going to be, they're going to have to figure out how to make sure that they are the ones nabbing those dollars from those high-end consumers and not Whole Foods via Amazon.
And yet, Corey, Blue Apron, a very different business from Whole Foods, Amazon. How does that really change the competitive landscape?
I mean, look, Whole Foods and Blue Apron are very different businesses. Yes, they serve food to consumers, but that's sort of where the similarities, and a certain type of consumer at a certain price point. What you see Blue Apron doing is trying to market really aggressively, because this is a new kind of idea, sending people just the amount of food that they need to make for a certain meal with that recipe and delivering it on a regular basis. And they're spending vast fortunes to do it. You know, Alex mentioned their marketing costs. They spent over $60 million just last quarter, $61 million last quarter. Look how much they're spending every quarter in advertising. And as a percentage of revenues, it's going way up. It was 25% of revenues last quarter. So it's an extraordinary amount of money to be spending on marketing. That certainly will help them in their IPO because now the name is better known. But they really are just spending like crazy, like drunken sailors, to try to get people into their service. The goal, of course, is not just get them in, but to keep them, and they have yet to show that ability.